Launching into the uranium side, just candidly, it's not something that I follow very closely. I see the chatter on Twitter. I read guys like Doomberg and others, or I think you referenced in your recent report. And I've read a little bit about it. It's always been interesting to me. Don't follow the equity side of it. Don't really follow the fundamental side of it. Maybe just start with like kind of high level, maybe like a brief history of the uranium market. It's kind of a primer before we get into the details.
Sure. Yeah, I can just start with a little bit of macro. So, uranium goes through like pretty long cycles. It's a smaller market. If you look at all the uranium bought for nuclear reactors and you multiply it times the price, I don't have the actual like billions on hand, but it's, hundreds of billions. It's not that big compared to the total stock market, bond market, things like that. So, it's a more obscure market, but it's obviously very important. And so, typically in the past, I went through cycles where you have this buildup of inventory. That's the bear market, where the uranium buyers, they have more than enough inventory to run their nuclear reactors. So the price weakens. There's a bunch of explorers that go out of business because the price isn't enough to sustain their drilling. And then what happens is that inventories work down. Then it gets to a point where the buyer has to step in, and they get a little nervous when inventories get too low. Because if you look at the cost of running a reactor, the fuel is a very small part. It's below 20%. So they don't really care what they're paying. If they have to pay
Mm.
$50 a ton or 100, doesn't really make a difference. But what does make a difference is if they can't get any supply and they can't run their reactor, that's a big problem. So that's why you see these spikes in prices when inventory gets low. The nuclear reactor buyers, they get a little nervous and they just say, I need a refill. I don't care what the price is. You see a big jump. And obviously, this is a commodity business. So you get all these new explorers coming in, want to take advantage of that price. You get a kind of bull market. Last bull market was 2007, 2003 to 2007, which we cover in our report. Now we're 2 to 3 years into another bull market, but we think there's a lot of room to run just looking at stock prices. And this isn't a typical cycle. It doesn't look like, because usually there's a set number of reactors. They're building some, they're decommissioning some, kind of steady state. But now the world is starting to realize the opportunity of nuclear. If we really want to hit our emissions targets, it really is the easiest way. And there's new technologies from Bill Gates and others that are much safer, smaller footprint that could change the game. So we're already in that normal destocking bull market. But if you get an actual step change in demand, new reactors being built, then it's a whole different ballgame. This isn't just a normal up and down cycle that can whipsaw you. It could actually have legs.
So, like, normally the demand is like relatively inelastic. You got a set number of reactors. They take a long time to build. It's fairly steady. They kind of know what they're going to need. But on the supply side, sounds like similar to, maybe conventional oil, where or like these offshore type mega projects. It's just, or any type of mining really too is a good proxy to this. It's just not like something you can flip a light switch and it comes online. I mean, is that a fair way to characterize it? Like, how long does it take when a bull market kicks in for a new deposit or new explorers to go out there and really make it happen?
So there's a nuance. It does take a long time, but it's not necessarily because it's so hard like an offshore drilling rig. It's permitting because you're dealing with nuclear fuel, and it can be dangerous if you just walk up on a nuclear fuel depot. So the permitting is the big sticking point. And so I think, if you have a mine that was permitted in the past, you can maybe get it going in 2 to 3 years. But if you're starting from scratch, you could be 5 years plus. So that's kind of what we're looking at. And then we also have the nuance of the market. For a while, the cheapest supply was coming from Russia and Kazakhstan, and they take the mined uranium and they process it. So they were the big processors too. But obviously, there's a risk to just doing business with Russia. So we used to have production in North America, in the US. US has fallen to nothing. So we're in this weird situation where there's lots of reactors in the US that need lots of fuel. They import it all. So that's another catalyst for North America in particular. If these reactor guys are starting to get nervous that, will Russia always be there? Is there going to be sanctions? Will they stop sending fuel to the West? Well, I want some supply in America. There's some in Canada already. Then you get a big change because you go from literally zero demand to it could be a lot of demand and no supply in America.